Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is NFP Live. This is the first NFP engagement that we've had in quite some time. The government shutdown was absolutely brutal on our scheduling. We're going to see a number. I don't know what it's going to say. I'm not even going to venture a guess. We believe that it's going to be a lot lower than the previous release, so we're going to go through our expectations here in just a minute. We're also going to show you a few of the resources that you could be using to get sort of a better handle on these economic events and to never miss out on one. So I want to welcome everybody back to the Trading Room over in the How to Trade community. Bobby Bob, good to see you. Always a pleasure. Steve Francis, good to see you. Let's see, over in YouTube land, Tina Jean, good to see you. Tina, yeah, it's very early for me. Let me see. Jeff says to sell everything. Call me Teddy says to sell. Gabrielle, the market is selling hard. Status server, market shows upside or downside. Please tell me. We don't know. Right now, this is heavy rotation. I'm not seeing really much of any movement. We've seen a little bit of action in commodities. Silver's coming off sort of in a big way. We talked about that yesterday. WTI crude oil is closing in on those yearly lows. That's coming our way. Almost guarantee it. So there's going to be some trades to be had. I'm very, very skeptical about this economic news release. I think that it could really fake us out if we're not careful. So let's go over our expectations and get dialed in and ready. Once again, I have to apologize for my voice. I'm a little bit hoarse, but it started pretty early in the morning for me today. This was one of those where if you're living in the Western United States like I am, you got to get up and get these news events. I was up at about 4:30 a.m. So we've been up a while. I've been getting prepped and ready to go. We're going to go over three of our big pairs before the number drops, and then also take a look at U.S. oil. These U.S. dollar pairs, well, we're going to look for a little diversification here out of the CAD, yen, the Euro, Great Britain, pound, and then I'll go through and cover the Euro USD as well. So good to see everybody's excited and ready to go. I think it's going to be a lot of fun. That's for sure. It's too early for you. It's never too early for me, Tina. I'm always, money never sleeps, everybody. Money never sleeps. Let's see. Authentic Entertainment. Hey, what's going on with the app? I don't know. You tell me. I think that what we have is a major relaunch and a rebrand that's due to hit the news wires really any day. I haven't talked about it yet because I don't really see it happening on my end, but I'm going to find out more about that today. Switch Markets is going to be pretty much a brand new website with a lot of your tools, a lot of your instruments, a lot of things you really want to trade, and it's all designed to be value added to you, the trader. So I'm going to be getting more into that later this week, but for today, probably not. Let me see. Please type in the comment box, buy or sell. Well, I mean, I don't really know whether to buy or sell, to be honest with you, status, but we're going to look at some markets right now. Let me see. Tina, I stuck with a few indices. I shouldn't buy them this close to Christmas. Well, yeah, I mean, it's really a challenge to be trading right now with any sort of conviction. So let's get into it. Let's dive in and just get into it and unpack exactly what we're going to be looking at for today. Switch Markets, remember, if you want to trade, if you're a new trader, if you're a veteran trader, head on over to Switch Markets. The rebrand will be up and running here probably in several days, and you're going to go ahead and bring your ambition into focus. Thousands of markets, zero commission accounts, advanced free trading tools. There's a ton of those. You just click on that button up there right behind my picture, and you got your resources. Learn to trade, EA tools, free trading journal template, market movers, Forex. There's everything you need there to get up rocking and rolling in the markets. So head on over to Switch. One other thing that I do want to promo before we move on, a lot of you really don't. We launched this YouTube channel a while back. This is a brand new YouTube channel, and we've got How to Trade Calm. We've got Forex Signals TV. This one right here is going to be what I would say probably where you're going to find our content moving forward. And they've got pretty much everything here where you see there's our live stream right there. We've got some videos out. A lot of you don't really know where to find these. I do a market analytics every week. That comes out before the Tuesday U.S. session. If you're missing that, be sure to tune in. It's usually a real quick watch, about 5 minutes, and I give you some of the big markets that I'm watching for the week ahead. This one right here, How to Trade the FOMC Minutes. That one dropped a few days ago. How to Trade the S&P 500. Build custom trading robots with your Forex VPS and get rid of your latency. So there's a lot of these things that are really highlighting the Switch Markets service suite. Now that's over on Switch Markets on YouTube. Be sure to check that channel out. Go over, subscribe, turn on your notifications, and you'll never miss a beat. All right, so what can we really say about today's number? I think it's a mystery. I really do. Here's our economic calendar. We're just going to take a look at this one because it's relatively easy to use. The big thing that I want to highlight here for today's number is that we don't have any idea what it's going to be. Now, we just had the ADP employment change number drop, 16.25, bigger than 4.75. I'm really staying away from those numbers. I'm not sure that they're valid at all, but we're gearing up and getting ready for our NFP in 5 minutes. We've also got all of this data, building permits, core retail sales, government payrolls, but this is the one we're focused on, non-farm payrolls. For November, we're looking at maybe 40,000, down from the big 119 previously. Guys, there is no way that anybody knows anything about these numbers. I believe that some people have already seen them, but I don't believe the market has the first clue about what these numbers are going to tell us. So be very, very careful on this drop. I'm not even going to venture a guess. I'm not going to even venture a guess on what these numbers can be. Remember, this is supposed to be an aggregation of the last 2 months of government data. The government shutdown was big. It disrupted everything. So we're really sort of focusing on this NFP as being pretty much the last big release of the year with regards to U.S. labor. Now, we do have CPI live on Thursday. I'll be back bright and early for those inflation numbers as well. But this is the big one, NFP. We just don't know, and I'm not even going to venture a guess. I don't believe anybody knows that's outside of the BLS. Okay, so unemployment rate. Typically, when I look at a jobs number, a jobs report, unemployment rate is always a big deal, because it's a lot easier to quantify an unemployment rate than it is to go through and count all the NFP numbers. So I'm looking at unemployment. If we spike higher to 4.5%, the situation's starting to get fairly dire there in the United States Federal Reserve. Remember, the Fed has two things they have to do. They have to ensure pricing stability and promote maximum employment. 4.5%, we're starting to creep to the upper end of that employment range that the Fed wants to see. So typically you're going to see some rate cuts to try to get the employment sector, to try to get economic growth up and rolling. All right, so everybody's calling for sells. XAU USD sell. Let's go ahead and take a look at this CAD yen first. This is going to be a big pair later in the week when the BOJ gets involved, coming right towards the end of the week, about Friday. This is a good pair to be watching today just because it gives you some insulation from the U.S. dollar. I love 111.50-ish down here. Right now we're trading about 112.45. This is a good pair to be watching for this week. Gives you a little bit of insulation against the U.S. dollar's movements that are going to really be predicated upon today's NFP report and Thursday's CPI report. So if you're looking for maybe a port in the storm and you don't want to trade the dollar, CAD yen, pretty good when I'm looking for downside support. That would probably be an excellent area to bid, 111.50, 111.50 to 60, somewhere in that zone. I really like that one, and that's also in our picks of the week that we put out on the Switch Markets video. All right, Euro USD. A lot of folks really like trading the Euro USD, probably the most popular pair in the world. We had a 920 EMA crossover that was our buy signal, and that one came across the board on the 1st of December, and it was an absolute banger. You got the bid, stepped up to the market. The bidders really took over 116-ish, and now we're up to right around 117.72. It looks to me like we're going to be testing 118. So I want to be on the long side of this market. The best thing that I could recommend for, if you're scouting a trade here is you want to be looking at something probably like this, a 4-hour chart, maybe getting a pullback somewhere where you can look to buy into this market with a little bit of confidence and conviction. Very difficult, though, right now because we are very bullish. You can see right back there, we also had a buy signal on the 10th of December on this 4-hour chart, and that's been a pretty good one as well. So if you were looking to trade this Euro USD, I probably would be looking to the buy side of it. Just remember that there are some key numbers that we need to be aware of with regards to our yearly range. Now, this is a relatively easy read. Nice spike low. There's your spike low. There's your top of this market, which is your yearly high, right up around what? 119. High right there is 119.18. Probably be watching that. I think that we're going to drive up there and have a look. Right now we're 117.75. It's going to be interesting. It's going to be interesting to see if we end the year on the new highs. For me, yeah, probably I would be betting that we hit 119. Now that's about 125 pips north. I want to buy this. I want to buy into this market, but I've got to get a decent retracement. As you can see on this monthly, we're probably not going to get it. So I would be looking potentially at that 119 area, maybe shorting 118.94s right up in front of that yearly high. Probably going to give you a top to maybe grab a little retracement before the big rally. Okay, let's go out. Let's take a look at gold right now. Everybody's talking gold. Take this right down to, say, a 5-minute chart. You've got our 920 EMA crossover. We've got 45 seconds to the news. Now, you can see earlier today you got a buy signal out of gold about an hour and a half ago, hour 15. There was your crossover on a 5-minute. I like these shorter time frame charts. On your 9 EMA, your 920 EMA crossover, I think a 5-minute chart is reasonable when we have a big news event. There's enough volatility here to where we can get involved, but you can see the bid sort of already has left the building. Let's dial it back to maybe a 30-minute chart. Maybe we can buy a pullback here on the number, something like this. You sort of got a daily low. Maybe we're closing sort of on a high. We're looking at this area right back up in here, 43.11. Really hard to get a read on any of these markets right now. But what you can see is right there is sort of your crossover developed. Okay, now we see the big rally off of gold. What would we be thinking about right now? I'm looking for a pullback. You can see that the market is bullish on the 30-minute time frame. If we get a significant pullback, maybe to that 42.95 area, that's going to be really hard to beat with regards to a bid. But you've got to get that pullback first. And you can also see that this buy signal is sort of setting up on your 30-minute chart with your gold market. So I'm interested in this trade right now. Let's go ahead and see if we can scalp, grab a quick scalp here. Let's see. Let's go with a buy, be a buy limit. You got to really watch your units, though. That's, don't really get too involved with my leverage. You're going to want to be definitely conservative with regards to what you have, but your buy limit order is going to be somewhere right in here, right around that 38% retracement. Sort of difficult because we don't have that top set up just yet, but that's not a bad area to be in. That's not a bad area at all. Buy limit right above that 38% retracement, which could be right around 42.95-ish, somewhere in there. I like that trade. It's just a question of, do we get it? So let's go ahead. I'm going to go ahead and take a look at the exact numbers right now. Unemployment rate goes to 4.6. Absolutely brutal. You're going to have to see interest rate cuts to fight this. You're looking at potentially a recession, maybe even something a little bit more serious. That is a big one right there. 4.6% unemployment rate. You see all of these numbers. What did non-farm payrolls come in at? 64,000. So 64,000 is a little bit better than we expected, a little bit better than forecasted. Still way beneath the previous release. I would be very, 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 very skeptical of these numbers. I think it's a lot worse than what we're really seeing here. That's a big one, guys. 4.6% unemployment. That's a bad one. What do we see developing really across our markets right this minute? Buy, let's see, we've got a lot of people saying buys, gold's up, clean setup for a sell from Gabrielle AD. I don't know. Is the NASDAQ a sell? I don't think you're going to want to sell anything. 4.6% unemployment means you're probably going to get interest rate cuts. We're going to look at those in a second. But this area right in here for gold, I mean, that's exactly what I'm looking at. So as you keep making new tops on these short time frames, as you keep developing a new range and a new top, your Fibonacci's just sort of move up with your top. And then you're looking to get that nice clean pullback. Personally, I'm a big fan of the 30-minute chart. You can see you've got a nice swing low down there that developed about 2.5 hours ago. You'll have an opportunity potentially to step up and grab a buy limit. And I just have those right above our 38% retracement. It's really all there is to it if you're trading Fibonacci's here. Interesting setup, though. Really an interesting thing happening in gold. We should be seeing rate cuts. That 4.6 unemployment rate really scared everybody. I'm going to pull up the official report, and we're going to go over it in just a second. But what this really means to us is interest rate expectations. So it's really difficult to get a read on what's happening. We know we had a government closure. The government closure really messed everything up with regards to our reporting. And you can see the markets are very sluggish in reacting to this. I mean, right now, everybody wants to trade, but look what's happening. Nothing's happening in your U.S. equities markets. The U.S. 2000's up a little bit. The U.S. 100, which is the NASDAQ, is barely positive. The U.S. 30 is barely positive. It feels like this might have been baked into the cake. So I'm not really overly excited about any of this. I know a lot of you guys want to trade right now, and if you're going to do it, be smart. I want a pullback. I'm more than happy to stay patient. I would absolutely love a pullback from 4,300 here in gold. I think that's an absolute fantastic trade, one that would be really, really difficult for us to lose. But this is really, really interesting stuff. I mean, it's be patient. Be patient. Don't rush in. Fools rush in. Don't rush into this. All right, here we go. Here's your employment situation summary from the Bureau of Labor Statistics. Let's see. Total non-farm payroll employment changed little in November, 64,000, and has shown little net change since April, the U.S. Bureau of Labor Statistics reported today. In November, the unemployment rate at 4.6% was little changed. It's still rising, though, and that's a big, big problem. Employment rose in healthcare and construction in November, while federal government continued to lose jobs. That's sort of what we expected. This news release presents statistics from two monthly surveys. The household survey measures labor force status, including unemployment by demographic characteristics. The establishment survey measures non-farm employment hours and earnings. For more information about the concepts and stats, you see the technical note. This is a really, really hard report to read. We do not know what's going on. Right now, our gold trade, I'm sitting at about 42.98 for the bid. It looks like we may get this chance right here in a second. I'm watching it closely. I would love to get this pullback. Remember, the devil is always in the details with a BLS report, always. And they save the big news typically for last. So when we're reading this BLS disclosure, the last paragraph's always big because that's where your revisions are, your revisions to past numbers. So let's go ahead and take a look at these revisions, and then Tony, I'll take a look at what do I think about the market, especially the NASDAQ and S&P. Yeah, we'll go look at equities here in just a second, but this is really important. The change in total non-farm payroll employment for August was revised down by 22,000 from negative 4,000 to negative 26. It's ugly out there. These are bad numbers. There's no question. The change for September was revised down by 11,000 from plus 119 to 108. Okay. You've got, with these revisions, employment in August and September combined is 33,000 lower than previously reported. Due to the recent federal government shutdown, this is the first publication of October data, and thus there are no revisions for October this month. Be ready for those. Monthly revisions result from additional reports received from businesses and government agencies since the last published estimates. All right, so let's just say what are we talking about? Things are worse than we thought. So is the economic contraction on? Are we going to see a big spike in unemployment in the labor market? I think that all this needs to prompt rate cuts. Unfortunately, with our inflation situation, it's really tough to cut interest rates. So here's what we're looking at for the next meeting. 43 days, 5 hours. We'll be in the saddle back for our first Fed meeting of 2026 and one of Jay Powell's final installations as Fed chair, as FOMC chairman. Take a look at where we're at. 75% believe that we're going to hold interest rates static. 3.25 to 3.5, so only getting about 25%. So when we look at a grid like that and that interest rate expectations of that nature, it's really difficult to make any sorts of decisions based on your jobs numbers and your Fed policy. Now, we just came off a Fed rate cut. So what do you think we're going to do in January? We do not know. You're going to see another set of jobs numbers. You're going to see some retail sales numbers from December that are typically very, very important because of the holiday season. And you're also going to see more inflation data. So when I look at something like this and I go, man, that's a bad jobs number, do we really have any idea what's going to happen to our interest rates in January? And the answer is no, we don't. I mean, this is really about as uncertain as I've ever seen it in probably the last 5 years since the COVID era kicked off. All right, we got some questions, a few markets to cover here. You can see right here, you just got to be patient with this gold pullback, but eventually it'll set up. I would love to see it trend a little bit higher so we could get a buy right at 42.3. I like that a lot, or 42, or 43, 43 even. I think that would be really a banger. But whether we get it or not, we just don't know. Okay, let me see, Tony, what do you think about the market today, especially the NASDAQ and the S&P? All right, let's go ahead and have a look. Here's Great Britain pound. Euro Great Britain pound. I covered this on the weekly update. It was a pretty darn good area down there on that lower channel line intersection right there with 38%. That was a good trade. Let's go right down to the US 500 and have a look. Okay, so the big thing we would say is on a daily standpoint, this market has been very slow really since Thanksgiving, and that shouldn't surprise anybody. Holiday trading can be a nightmare. It really can be slow, and we got a big sweep. There's your big move on the 12th of December, last Friday. There's a big move right there. But since then, it's just really, really, really tight. So when I see levels like this, when I see levels set up in sort of really tight market action, the first thing I always do is step back my time frame. I'd say, okay, what's happening on the weekly? And the picture for us is very, very clear on the weekly. No question. Spike low to a spike high, 38%. Was an absolute banger. What a bid. Absolutely, what a bid. So that zone right there in your 38% level on your US 500 is absolutely a fascinating zone. I would be watching that closely as downside support. More than likely, you'll get probably a pretty good bid if you do see a sell-off here. Now, the other thing that I would really watch is real basic stuff. Double top. You got a weekly double top right up there. Double tops can be a lot of fun. Now, you sort of have a cup with handles setting up on the weekly. We're going to cover that probably in a few weeks. We got to wait and see what price action does. But your read here is still bullish. I mean, you're still relatively bullish here with your US 500. That top right up there is 69, the 69.21-ish, and then you've got 69.25. So 69.25 is a big deal. That sort of is your double top on that all-time high level. So personally, I would much rather make my mistakes to the long. I would want to buy this market, but you have to get better trade location. You can't just buy it right now. I'd be looking to bid down there from somewhere right around 67, 66, somewhere in that zone, maybe 67, 70s. I think that's a pretty darn good level as well. You just have to be very patient, and that's the name of the game, is letting these numbers set up. I mean, these markets right now, it's really a killing field in there. The dollar index is off about 0.25%. Most of that since the NFP number because of our interest rate expectations. There's no question we're going to be looking to cut with that unemployment rate at 4.6%. That's a bad number. There's no question about that. We're not seeing any real changes in our Fed watch expectations. I'm watching that closely as we're doing this. But right there, so that's your level. That's your support zone. I wouldn't go to a shorter time frame. I mean, you could take this right down in here if you'd like, but I mean, it's just really, really, really tight. I think that this level right here, if we do see a bit of selling pressure develop during the U.S. session, that support zone is probably one of the keys that I'll be looking at for the rest of the day for the U.S. 500. Okay, NASDAQ was the next one up. For me, the NASDAQ is simple. Key level is 25,000. There's no question about it. So when we see a market really explode, sort of break out above 25,000, and then you pulled right back down here, and now we got our NFP number. We faked to the top side, and now we're rotating back down to 25,000. We talked a lot about points of control yesterday and what it is to understand how a market is actually functioning. This market, 25,000 is a magnet. There's no question. We can't really say we can't sustain trade above it, and we're really struggling to sustain trade below it. So when you look at something like a 30-minute chart, you can see the price action that's unfolded here in the last day or so. Nice big sell-off right around 24.8, right back up to 25,000. Got a rally on NFP, sort of the dovish news. We were thinking that maybe we were going to move a little higher, and then we completely reversed back down to 25,000. So if you could find a level to play off to the long, I mean, that's what you would want to do. Is there one there? Nope. Key level's 25,000, 38% is right there at 25,059. Today's close is big. You can almost see this daily hammer setting up. That's a hammer formation, and if we see a daily hammer with potentially a close up above that 38%, we could easily see this market price in those new interest rate expectations going in to CPI on Thursday. So I'm not really overly optimistic you're going to see any big moves this week. I'm just not. I don't see that action right now happening. But that right there could be a pretty good trade and sort of preserve your bullish bias. Watch that daily range today. If you do get the close up above 25,000, maybe up above 25,059, nice daily hammer formation. That's typically a reversal signal. So we'll be watching that relatively closely. Potentially get that bid headed north going into CPI. That wouldn't be a bad trade. Okay, it looks like our gold trade is sort of setting up. I mean, we're right on the cusp here. We've got that bid's right around 42.98. If I was hyper aggressive here, we could take the bid right up to probably 43 even. I mean, I really don't mind it. Maybe just a few ticks above 43 flat. It's not a bad bid. Just when you move up your entry point above your above your 38% or your hot support zone, you are taking more of a risk. So this trade right here, I would feel much better buying it down right around 42.98 or somewhere down in there. But if you want to be aggressive and try to get in and maybe make a play, you're probably going to have to move your entry point up a little bit. I really like the long side of this market. I think it's a pretty good one. Let's see if we get filled up right here. We're trading 43.05. It looks to me like 4,300 is going to get tested, and that's not necessarily a bad thing. We get a nice pop off of this level. Looks like we're going to get it right here. So we're not really aiming for many points here. I mean, I would be buying 4,300s and probably looking for like 43.03 50s, maybe 43.05. Stop loss, we're going to be probably pretty quick on the trigger. I'm not going to let this one get away from me underneath 42.97. The last thing you want to do is get caught on the wrong end of a reversal or a sweep lower, and those things are very, very common on an NFP day. So I'm not trading this stuff with a lot of confidence today at all, just because I think those numbers confused people. I don't think they reassured anybody, especially after the downward revisions to August to September. And then you had a 4.6 unemployment is not good. I mean, you're starting to talk about 5% coming our way in a big, big hurry, and we haven't seen anything like that in a long time. Let me see. Tina, perfect. That Euro USD, you got it. Yeah. Well, the Euro USD is pretty good. Spot on. The US 100, US 30, both not that great. I think the indices right now are trouble. I would wait until the U.S. Open, which is going to happen in about 45 minutes. I would wait for the U.S. Open before I did anything with the U.S. indices. I would wait for that to set up for like a half hour. I got a lot of confidence in this gold trade, though. It's just I don't know that we get it. You can see how slow the market really is moving right now, and that's just that's a function of uncertainty. No question about it. Derek, timber. I don't know. We're not trading timber, are we? Trading lumber futures. That's a crazy market, lumber futures. Can't say that I've ever traded it. I've watched it. Not a lot of volume. Well, we're going to stick with this one for about another minute or two, and then we're just going to have to go ahead and move on. But as far as what can we expect today? Well, I mean, there's a lot of things that could happen. And there's probably a few things that will happen. I would be really surprised if we see any sort of trends today. Right now I'm watching the US 100 pretty much is the big mover and shaker, and that's off the NASDAQ was off 129 yesterday. US 100's off about another 0.25%, but that's really flat. That's very, very modest price action. So, I mean, I look at these equities indices, and I'm not impressed. I'm not impressed with the action at all. Okay, here we go. All right, 43.01. We should be getting involved here any minute. My take profit, let's go ahead and set this up. Let's put it right up here to right around 43.04-ish, something like that. And you'll have to ignore Ignore my leverage. Like I always say, the leverage isn't really overly important. These are demo dollars. We've traded really huge. Okay, right there, we just got filled up. A lot of times you're going to see that because the spread is so big in this spot gold. Like right now, we're looking at like 72 pips. That's why your leverage needs to be a little bit shorter than usual. Okay, this trade's really going the way that we wanted it to. We got filled right there. We're looking at right around 43.02. We should get that immediate kick right up to 43.05. If we don't get it, I mean, I'm more than willing to sit here for a little bit just because we didn't put much leverage on. But we will have to exit at some point. I mean, we're looking for that immediate pop. We're looking for bullish price action. One thing I like to do when I'm managing these trades is I like to take it right down to, say, like a 1-minute chart. I want to see that short-term price action. You'll see on that 920 crossover, you've got sort of a sell signal setting up on the 1 minute. I don't really care too much about that. I think we're going to go right up and get paid 43.0510. That's going to be a nice little sweep, about what, a $5 profit. Not too shabby at all. Not too shabby at all. We're trading 43.04. What do you want to do right now with your trade management? You sort of went right up to your profit target and didn't get filled. This could definitely come back against us. Still relatively confident we're going to kick higher and maybe see 43.05 in short order. But right now you're seeing that compression that I just talked about. This type of trading is not necessarily my favorite kind. I love to get in and out, especially on a scalp right after an NFP. And right now we're starting to see the market drag against us. Are we taking a risk that's good? Is it justified? I still feel pretty confident about this kicking higher to 43.05, but we're starting to trend back down around to break even. So where should our stop loss be on this trade? This isn't really a true tick scalp. We did some tick scalping last week. What really are we doing here? Sort of a short-term position. I mean, I've let this thing sit there for a minute. Right now, I'm in no hurry to do much of anything. We do have the 1-minute sell that's just lined up on the 920. I don't really like that. I'm not confident in that. But the market's relatively flat. So we're going to let this thing play out for a little bit. I mean, I have no problem doing it. You can see there are some bidders there. This zone right here is probably where we're going to either make the money or we're going to lose it. 42.97. That's a big level. We're seeing what I would call compression right around 4,300. So I like our entry, but it just looks to me like you're going to break down underneath 4,300 now. And if you do that, we might have to go for a bit of a ride. I'm willing to check price out at 42.90, 42.95, somewhere in there. But we're not going to hang around. If this thing goes against us, we're going to bail. I'm still relatively confident that we're going to get paid. And these are all the things you're thinking when you're making these trades. There's no reason to bail out of this thing yet. Personally, we're in here just a little bit too long for my own comfort. I would much rather be out of it. Got conflicting signals on that 1 minute 920, but we know we have a really sweet level there right around 43 to work with. I would say that if we don't get paid off on this trip up, we probably should start thinking about just taking the money and walking, but I think we're going to get paid right here. Looks like we're going to break. We're breaking up 43.04, 43.0450, 43. Let's print 43.05. Let's see if we can get a nice pop up over 43.05, and there it is. So that's sort of textbook trading. That's gold trading. If you guys are interested in that sort of thing, stepped up, bought our key level on a 30-minute chart. We let it play out. It took a little bit more patience than I would have liked, but it was a good trade. Went right down to 4,300. We were very aggressive with what we were doing there on the execution. And right there, there's your box. There's sort of your box. And what I mean by a box is you've got that big time level, which 42.97 is your Fibonacci retracement on the 30-minute chart. And then you've got compression right around 43. We bought 43s, playing the bidders are going to be protecting that 38% level the first time down. And we nailed it. So that's sort of a decent look at a gold trade. That's for sure. All right, let's see. We got a couple more questions, and we're going to go ahead and call it a day. I really, I won't say that I have a bad feeling about these charts today, but I think they're suspect. I don't know that today's the day to wager a lot of money and put a lot of money. This really feels like holiday trading to me. It really does. So let's be very careful. Caution's the better part of valor. Here's U.S. oil. You can see that U.S. oil is making a run towards our 55.15 level. What is the weekly low? 55.59. So we're probably sitting down there right around 55.25. That's probably not a bad bidding area. You just don't want to be around if 55 gets taken out. We've been calling for this for a long time. I think that you're going to go back and you're going to nail these lows, which were developed back in the big panic of April. So it looks like you're going to get that bearish extension I've been talking about really throughout the fall. It looks to me like you're going to come off in a big, big way here in WTI crude. So if you're going to scalp in front of 55, I would give you my blessing, but I would say be very, very careful, because if 55 gets taken out, look out below. It's just like Derek said right there, timber, and that would be a big-time timber. So be very, very careful at 55. If that level gets wiped out for U.S. oil, you could be. I think you'll see 52.50 relatively quickly. We just have to wait and see how these economic numbers develop for the rest of the week. All right. We had a question about Bitcoin, and then we'll probably call it good. Bitcoin's in trouble. And, I've had a lot of dialogues with traders in the room, and they've asked me, said, Shane, what do you think about Bitcoin? And I go, well, let's be honest. You've got compression right here. You've got about 3-week compression. Let's go to this monthly, and I'll sort of reinforce what I'm talking about. The monthly chart for me is always important with Bitcoin, because it does give you a good idea of what the trend is. Last month's low is a big one, and you take it last month's low right around 80,537. Probably depends on your broker. It'll be a little bit different depending on where you trade. But if that level gets wiped out, you're going to knock a lot of retail longs out of the box. There's a lot of folks that dug in, they bought this thing, and they're playing off of last month's low. And look at what's happened in Bitcoin. We rallied up right to 94.2, 94.3, and then we reversed right back down to 85. So this is textbook compression. And what I mean by compression is we've bounced back and forth for about 3 weeks. 1, 2, 3, even 4. You could even say 4 weeks. That's a big time compression zone. And what happens in markets is they load up and get tight before they move. If I'm watching this chart, I am very skeptical that you're going to get the rally that we were talking about towards the end of the year. Now, I talked with several traders that know their stuff when it comes to Bitcoin, and my opinion was very basic. I said, listen, if you don't get reestablished up above 100,000 by the end of the year, we could be in for a sell-off right now. It looks to me like we're going to get broken to the bottom side and check out maybe some uncharted territory, some levels that we haven't seen in a while. So you've got your last month's low, November's low. That's big, right around 80. If that breaks, I mean, right now 85. The bidders are protecting 85. Once 85's gone and you run at 80, then it turns into a real serious situation to the downside. There's going to be a lot of traders that get smoked out beneath 80. Believe me, 78% is a big deal. Once 85 is gone, typically you're probably going to run last month's low, and then once that's broken, I mean, you're going to 75. You're going to test this swing low on the bottom of this market structure from April's lows. So we're seeing monthly trends. We're seeing these markets, Bitcoin trending towards yearly lows. What else do you have? You've got WTI crude oil trending towards yearly lows. You've got gold still hanging relatively bullish. We sort of have a fairly major reversal today in silver, but still very, very bullish there. The US dollar coming off a little bit today, but it's starting to flatten out now. All that spells uncertainty. I mean, all of it. So if you're holding longs in Bitcoin, caution's the better part of valor. You pretty much know where the pressure really is going to be. It's going to be beneath 85, and it's going to be beneath last month's low, which is right around 80,537. Ethereum is another big one that I was really predicting a major crash in Ethereum because of the way that the technical's set up. Last month's low is a big deal, 26.21, somewhere in that zone. Look at that compression between 50 and 62%. So right now, the bidders have sort of defended 85 in Bitcoin. They've defended 27.25 in Ethereum. But once those levels go, all eyes are on last month's low. If you do see a sell-off beneath last month's low in Ethereum, I would expect an explosive sell-off somewhere down around 22.50, maybe 21.25. Probably some bidders will dig in there and really try to defend 2,000. But this is questionable. All of a sudden, crypto's in a sort of a questionable position as we roll towards the yearly close, and it's something that we didn't expect, something I personally didn't expect, given the rate cut cycle that the United States Federal Reserve is entering into. Cheap money typically means higher crypto prices. Where are they? They're not here yet. So be careful. I'm watching our interest rate expectations closely. Let's see. The futures traders, it's 75.25 that you don't get a rate cut in January. Let's go ahead and see how the mainstream media is covering this event. A lot going on. All right. Let's see. What do we have? CNBC does a little rebrand too. Look at, they changed their logo. I'm always aware of things like that. They're trying to rebrand. Funny. Payrolls rose by 64,000 in November after falling by 105. Delayed jobs numbers show. Stock futures tick lower after delayed jobs figures paint a weak picture of the economy. Consumers are feeling gloomy about the economy. Here's why they're spending anyway, because they don't have any choice. Things are expensive. You can't avoid spending. I mean, I've never seen. I tell you what. I mean, I mentioned it yesterday, but the amount of money to go to the Montana State college football game this Saturday, the numbers it's up to $750 just to get in the door. Never seen anything like it in the state of Montana. Typically, if you want to go to a game, you can go. That's a lot of money. So pretty much all the folks that are working class, middle class, aren't going to that one. So that's what we're seeing in this country. That's why your consumer confidence is low, and that's why people are scared, because inflation. You're going into a rate cut cycle, and inflation is high. Everything from football tickets to steaks to cars to houses, you name it. And there's one lesson. I remember when I was still studying in school, my finance studies. There was one thing that always stuck with me, and it was like, if you're going into a recession, don't be broke going into a recession. Well, a lot of people are broke, and we think that potentially a recession's developing. I don't know that it is, but we're in these are sticky times right now. There's a lot of questions surrounding everything from tariffs to the jobs markets to politics, and I don't know what's going to happen. We're just going to buckle up. We're going to make our trades just like we did on gold. We're going to get in, we're going to get out, and we're going to be in pretty good shape. We're going to manage our risk. We're going to be aggressive. We're not going to let these things get a hold of us. Don't let these markets get a hold of you this month. We've got a whole new trading year right around the corner. Let's take our time. Let's finish this year strong. Let's come back in January. Let's take our time for a few weeks, get the lay of the land, and then we can start diving in and really making some high leverage trades and some, I won't call them dangerous trades, but I'll say bigger trades as we get into February, as we get into March. Those are the greatest trading months out there. Towards the end of January to February to March to April, I mean, that's when you want to be active in the markets. All right, everybody, let's see. I got a couple of questions in the live chat. If you have any other questions you'd like to ask me right now, fire away. I got a few more minutes here, and then we've got a whole slate of meetings. I'm looking forward to meeting a few traders today. Let's see. Rajesh, buy Bitcoin and et cetera. Well, maybe. I'm sort of scared of Bitcoin right now. I don't see the movement. I don't see the movement above 85. If I was going to make an intraday trade on Bitcoin, my stop loss would be right beneath 85. Let me see Max. Good to see you, Max. I sold from 43.10 down to 43.06, trade closed, but I need a buy position that will go very high and not scalping. When should we buy? What's a good price to buy? You want a gold buy idea? All right. You're looking for a position buy in gold. I mean, I don't disagree with you. I think you're probably spot on with that type of mentality. I always like, if I'm going to make a position buy, I typically lean on my monthlies because that's more of an investment. Problem is your monthly isn't going to help you in this situation. It's just nice symmetry. Let's go to a weekly. Probably down in there, 41.75-ish, 42s maybe. That's not a scalp trade. That would sort of be a position trade. If you were fortunate enough to get a big sell-off today and then maybe another one on CPI, you might be able to get that one by the end of the year. But more than likely, you're going to be watching that trade in January sometime. But, I mean, the trend is still up. It's just not as clean as it was. I mean, this was the rocket ship right here. And then there's a pullback, and then we just sort of flatten out, but now we're grinding north. So not necessarily a bad trade to be watching 41.75s, maybe 42s. And we'll be covering gold in the near future, so I wouldn't worry about it. Let me see, Ahmed, primary zone, or Ahmad, excuse me. Primary zone is 42.60 to 42.70. Secondary buy zone is 42.85 to 42.90 if we get a good pullback. Yeah, I mean, I don't have a problem with your levels. I really don't. Gold is a buy or a sell. For me right now, it's neither. It's neither AI, the AI world. Not interested. Let me see, Tom North, a gold sell at 43.19, key level 62%. I mean, you could do something like this on a 4-hour chart and try to build a short scalp. $43.20. I believe that's sort of what you're saying. $43.19, somewhere right in there. I mean, I don't hate the idea, Tom, but the biggest thing you're gonna have to do is really, really, really watch. Well, on 1-hour chart, 4-hour chart, you know, it's the same basic wave we're looking at. So if you're gonna short gold, you got to be careful. You don't want to get caught up in this mess. It could really get bad, especially. I mean, that you see it right there. This 4-hour chart, you're up almost 1%. I don't know that you want to scalp against the bullish pressure today. Remember, rate cuts mean a weaker dollar. Typically, rate cuts are going to follow rising unemployment. That's going to lead to inflation, which is going to send gold higher. So to me, if you do step in there and take that scalp, I don't hate the trade idea, really, I don't. But you've got to be quick on the draw. So, you know, my stop out point there, if I'm selling 43.19s or 43.20s, it's 43.25 or probably 26.50 max. And even that's a $6 range, and I think that's too much to go against this type of pressure. You don't want to go against this type of pressure. I mean, you really could get eaten up on this trade. To me, I didn't want it. Still don't want it. But if you take it, you know, like I said, there's no real problem against trading against pressure. But take a good look at what's happening here. Okay, pretty good scalp right there. You rode to a high, you know, 43.20.22. Okay, and then there's your reversal down to 17. So if you were looking for a tight scalp, that was a dandy trade. But if you're looking for more of a position, you've got to be very, very careful with your stop outs. Because if price does on that 4-hour, that 1-hour chart, if it breaks above 62%, you're going higher. Start thinking 43.50s, something like that. Good hammer, though. Good 1-minute hammer setting up. So, I don't hate the trade. It worked. For me, I see it as just being very high risk. That's for sure. All right, everybody, I'm going to go ahead and sign off for right now. I want to thank you for joining me. It was bright and early. Like I said, I've been up, probably already been up 2.5 hours working on this stuff. I think it's going to be a tough day to trade. That doesn't mean that you can't trade it. Just be aggressive with your stop outs. Don't let something eat your lunch today. This more than likely is going to be a rocky U.S. Open. So don't commit to either side unless you're sure. And if you're sure, I mean, go get them, Tiger. But be careful. Like I said, interesting trading week. Tomorrow's going to be a big one. Tomorrow with the CPI, tomorrow's Wednesday. Wednesday is going to be sort of the calm before the storm, and then CPI. We're going to start getting into the BOE, the ECB, and then CPI on Thursday, and then you're going to come right back during the Japanese session, and you're going to get a look at the BOJ's first rate hike in a while. It's going to be big. This gold trade worked, though. I mean, you can't argue with it. Boom, boom. Nice pullback, 43.16. What's your low down there? 43.15. That's a $5 move. There's nothing wrong with that. Nothing wrong with that. Personally, it was a little bit too rich for my blood. But if you guys got that short trade, fantastic. Great work. All right, everybody, I'm going to go ahead and sign off. Katie Lyon, great live. Thank you. You're absolutely welcome, Katie. My pleasure. Let me see, Tom. I appreciate the reply. I would be looking for a -6 and a +12 on this, but feels risky going against the seasonal bullish trend. Well, I mean, I don't mind. You're setting up a 1 to 2. So if we looked at your 1 to 2 trade from right this level, you probably got paid off at a 1 to 1, and we're still waiting for the big selling to come in, and you could see that reversal on the 1 minute. I just think there's a lot of pressure involved there. Janet, thanks. Great session. My pleasure, Janet. I always like to see some of our Australian friends. I'm in the market, the How to Trade community. A lot of you traders have been with me for a long time. Lita, Janet, familiar faces, familiar names. I'm sure appreciate you guys joining me all these years later. Pretty good. Let me see. Etak, what time is NFP? It's already gone. We hit NFP about 35 minutes ago. Let me see. The results are shocking, though. Cheers for today, bud. Absolutely, Grant. You're 100% welcome. All right, everybody. Have a fantastic trading day. If you need anything, head on over to the How to Trade trading room. send me a private message and head on over to Switch Markets TV, or not just Switch Markets on YouTube. Set your notifications. Follow would be nice. It's sort of a new channel, so our views, it's sort of probably one of the loneliest YouTube channels out there, but we're going to be putting a lot of content out, and a lot of it's going to be designed to sort of satisfy the demand for AI, for EAs, for things like that. And we've got a few ideas that are coming up that I think are going to be pretty good and pass along some value to the traders. So check out Switch Markets over on YouTube. And if you have any questions at all, you can leave them beneath this live stream and I'll get back to you. Or you can head on over to How to Trade, send me a private message and I'll get back to you. Let me see. Katie, first time from Liverpool, UK. Well, thanks for joining me. It's funny. It's already getting dark here. It's probably already dusk in the UK. I remember being there a few years back, and boy, at 2:30, 3 o'clock in the afternoon, it just started to get dark in London. So, all right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See ya. Looks like the computer froze. That's a new one. Battery died. Gonna have to bear with me just a second. It looks like we're having some technical issues.